Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning breakfast, coffee or tea, and let's enjoy today's episode.
Okay, let's dive in. We're digging into the housing market today, looking at some fresh signals that have just come out. It's definitely kept everyone watching closely.
Absolutely. And for this deep dive, we're focused on a specific article, really, that gets into these weekly mortgage rate trends and maybe more importantly, how home prices are actually, reacting.
Right. So our goal here is pretty straightforward. Break down this source material, figure out what it really means for you. Maybe you're actively looking, maybe just keeping tabs on the market or, just curious.
Exactly. And the big question this source helps us tackle is, okay, rates are high, we know that, but are we finally seeing that pressure translate into some relief on the price side? Let's get into the specifics.
Okay, so let's start with the headline number from the source. The average rate for a 30-year fixed mortgage, week ending May 22nd, 2025, it landed at 7.04%.
Yeah, 7.04%. And that's actually a little tick upwards, 3 basis points higher than the week before.
And as the source points out, this isn't just like a blip. It's the third week in a row rates have nudged up. And generally, they've been bouncing around the 7% level for, most of the year now?
Pretty much. And that 7.04%, it really bites when you look at actual payments. The article gives a solid example. Buying a median-priced home, say $414,000 according to the NAR.
Okay.
Put 10% down, and boom, your monthly principal and interest payment is pushing nearly $2,500.
Wow, almost $2,500 just for P&I. Yeah, the source definitely highlights this impact. It mentions how, ever since rates shot up from those crazy pandemic lows, monthly payments keep hitting new records. The article even calls it, and I quote, an all-around terrible time for buyers. And honestly, looking at that payment number, you can kind of see their point.
You really can. And, to understand the bigger picture the source talks about, it touches on the basics. Home prices, like most things, are about supply and demand. More buyers than houses usually means.
Prices go up, standard stuff.
Right. The basic economics the source uses as a baseline. And it gives that important historical context, too, that the U.S. has had this long-term housing shortage, really since the '08 crisis. Not enough building happening.
So that lack of supply has been pushing prices up for years? That's the background?
Yeah, exactly. That undersupply has been a key driver. But, and this is where it gets interesting, the source suggests some new data points might signal, a bit of a change in that dynamic, maybe some power shifting back to buyers.
Okay, how so? What are these signs?
Well, one key thing the source flags and what home builders are doing, or maybe what they're not doing. They apply for way fewer building permits last month. That signals future construction is slowing down.
Fewer permits. So why are they pulling back now, does the source say?
It does. It brings in analysis from Wells Fargo economists Charlie Doherty and Ali Haji-Beji.
Yeah.
They point to the high mortgage rates, obviously, but also something called an elevated inventory to sales ratio.
Inventory to sales ratio.
Yeah.
Okay, break that down.
Yeah, basically, it just means homes already built are taking longer to sell compared to how many are listed. So if that ratio is elevated, sales are sluggish.
Got it. So high rates, slower sales for existing homes.
And they also mentioned increased policy uncertainty kind of weighing on builders, too.
Right. So it makes sense. If builders aren't selling the homes they already have fast enough and they're unsure about the future, they're going to be hesitant to start digging new foundations.
Exactly. And the source kind of frames this builder hesitation not just as a reaction, but maybe as a signal itself. Like maybe the total cost, the mortgage, and the price has hit a ceiling where even builders think things need to cool off.
That's an interesting take, that the builders themselves are kind of voting with their feet, signaling a potential peak.
It's a key argument in the source. And this ties directly into another major point. What's happening with housing inventory right now?
Ah, yes, the supply side. What's the news there?
It's pretty significant, actually. The source highlights that housing inventory jumped substantially. In April 2025, it was up 20.8% compared to April last year.
Whoa, hold on. Over 20% year-over-year increase? That sounds like a lot.
It is a big jump. The source puts the actual number of homes on the market in April at 1.45 million.
1.45 million homes. And the article puts that in perspective, right? Saying buyers haven't seen that many choices since When was it?
Since September 2020.
Okay, September 2020. But as the source notes, that was a totally different world, wasn't it? Rock bottom rates, bidding wars everywhere.
Completely different. Fierce competition back then. Now you've got these high rates, sure, but according to this data, suddenly a lot more homes to choose from.
So what does that mean practically for buyers, this increased inventory?
Well, the source is pretty clear. More inventory shifts the power dynamic. Buyers can breathe a little, take their time, look at more places, and crucially, they have more room to negotiate. Haggle a bit.
And are we actually seeing that happen? Evidence of buyers using that leverage? Price cuts.
We are, yeah. The source cites Zillow data. Nearly a quarter, almost 25% of homes listed on Zillow in April had a price cut.
1 in 4 listings dropping the price in April. That feels noteworthy, especially for spring season.
It really is. And the source says Zillow is calling this a record high for price cuts during this peak buying season, at least in recent years. It definitely backs up the idea that sellers are feeling the pressure from that rising inventory.
Okay, so inventory is up significantly. Price cuts are hitting recent records. What does the source say this means for overall home prices going forward? Are they expected to drop?
The article brings in a specific forecast, a new report from Zillow again. And yes, it predicts that overall home values will actually dip slightly this year.
A dip. Okay. How much are we talking?
The prediction reported in the source is for a fall of 0.9% between April 2025 and April 2026.
Okay. Less than 1% drop over 12 months. Interesting. And what about the number of sales? Does Zillow predict more or fewer homes will actually sell?
That's the other side of their coin. The Zillow report, according to our source, forecasts that even with that slight price dip, the actual volume of sales is expected to rise.
Okay, right. So let's try and synthesize this because the source is definitely painting a picture with some competing elements. You've got mortgage rates stubbornly high, pushing near that 7% mark, making that monthly payment really tough.
Absolutely. That's the immediate pain point for buyers, no question.
Right.
But like the source details, running counter to that, you have inventory way up over 20% year over year. More choice than buyers have seen since late 2020.
Right. And coupled with that, you have the strong signal from sellers, nearly 1 in 4 listings cutting prices in April, a recent record for that time of year.
Exactly. And then layered on top is that Zillow forecast predicting a very modest drop in overall values, less than 1%, but anticipating more sales activity.
So pulling it all together based on the source, it seems like the message is, yes, the cost to borrow is high and remains a huge hurdle, but the cost of the asset, the actual house price, is showing real signs of softening, driven by more supply and seller adjustments. It creates a really complex situation.
It really highlights the nuance, doesn't it? It's not just one single number driving everything. You have this real tension. High borrowing costs versus more homes available and more sellers willing to deal. The source suggests this mix means 2025, despite the rates, might not be quite the uniformly terrible year for buyers it first seemed. It's complicated.
Definitely complicated. We see those rates creeping up, creating that payment challenge. But then this counter pressure from more inventory and more price cuts. The market's got these significant forces pushing and pulling against each other.
It certainly does. And it kind of leaves you, the listener, with a practical question, thinking about the source's data points. Okay, monthly payments are high because of 7% rates, pushing towards $2,500 a month for principal and interest. How much does a predicted overall national price drop of like less than 1% over the next year really change your calculation if you're thinking about buying?
Yeah, that's the key tension, isn't it? Does that potential tiny dip in the sticker price actually make a meaningful difference when weighed against the hefty borrowing costs right now? Something to really chew on.
Well, that wraps up today's episode of Reality Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.